There we go. Good morning, everyone. We are recording, so we got the recorders up. Everyone should have access to our weekly planning and scanning, or at least our trading observations for the week. I'll let you guys take a read or gander what went up, what went down last week. All the stock indices were up. It was the Qs. The technology sector gained the most. Interestingly enough, in the Qs, on a weekly basis, we formed, as we were talking about last week, has the potential to close above that high, which we did, interestingly enough. None of the indices are in a weekly buy signal, but we do have the Qs, the NASDAQ 100. Excuse me, I take that back. The Russell, the IWM, has always remained in a buy signal. So the NYSE, the diamonds, they are all in sell signals. But the interesting thing about these sell signals is the market has a sell signal. It came right down. And the bottom chart, what we're looking at for visitors and new folks, is the bottom charts are weekly charts with my person's quarterly pivots overlaid. And the last couple of weeks, starting in the new year, interestingly enough, you will note that with the exception of the Dow Jones Industrial Average, if we take a look at the top side here, you'll note that these are daily charts with, and should be, if I don't play around with all my stuff, which we do when we teach. And by the way, going out to San Diego for the 36 hours was interesting. I met a few nice people out there. I know it was nice to meet Bach Yam, who is in our room currently. Bach, thank you for coming out. We also had Mark Bradley come out and visit. That was awesome to see. It's always nice to see, put the name and the face together. So thank you very much for coming out, Mark. That was, hopefully we made it. At the very end, we made it through. It was a kind of a weird deal in the fact that Sheraton has two hotels. They're about a mile apart. With like a parking lot in between, and they call it the East Tower and the West Tower. And well, everyone went to the East Tower, which was about 3/4 to a mile away, and walked over to the West Tower. So it was kind of a late start. I'm not sure why TradeStation or the Sheraton didn't get those details for everybody, but it all worked out in the end. We went a little overtime to make up for the people that had to walk that distance, and God bless you and thank you. And at the end, I think the funny thing is no one left during like the break times. You know, some people, you go see a presentation in a seminar, and you know, people just go on about not a lot of anything, and then people just leave at halftime, so to speak. You've been to those types of seminars, I'm sure. Well, not only did we retain everyone that came, we actually picked up a couple stragglers, I was told, that were sitting in the hallway that asked if they could come and sit in. So people that were just walking by, staying at the hotel, like, what's this guy talking about? And came in at the midpoint break session. So that was kind of nice. We did have a good message about what the tools we use, and we did a little bit of analysis on the markets. And so I say thank you all for that, and TradeStation using their platform and how we integrate our indicators with that seemed to have resonated with a lot of folks. There's a lot of people that were taking classes and going through educational format with other educators that had never heard of anything that I was talking about. And the one thing that was interesting is a lot of people did still currently agree. One of the things that I find interesting that it is important to talk about today is that a lot of people are still being taught, and a lot of educators and traders are still using this volume histogram as a reliance on trend strength in the market. And so with that said, I think it's important that, you know, we've identified years ago that, hey, by the way, this, and I used this back in the early 80s, many of you know that, because volume bars, you know, it was kind of a delayed thing, right? And with futures, you didn't want to be delayed. So with that said, the cumulative tally of positive moves, negative moves, and what the volume is on those up and down moves, right? So an up day versus a down day, you can clearly see a vast difference in the volume structure, and give more reliability if this is a clean reversal buy signal, and with stock indices looking at these AD lines, which again, a lot of people were very surprised about, because people did say, oh yeah, we use the tick and we use the arms index and all of those, and even the McClellan oscillator, which I use in this room with you guys, measures the advanced decline on just the NYSE. So needless to say, kind of an interesting thing to go through, and and some people, there was a gentleman that said, is this guy going to talk about something I can understand? And that was kind of funny, because, you know, it's nice to take someone that has had no education, that wants to learn how to invest, and say, hey guy, if you want to learn to trade right, then these are the techniques you probably could help you, and learn to grow into this. While it might be too advanced right now, but it's something you want to grow into. I'd hate to give a guy, as an example, a golf lesson and hand him a golf club that's designed for, you know, a baby in 3 weeks, you know, like one of those real whippy, flexible type shafts, and then 3 weeks later he gets the idea of how to play golf a little bit, and yet he's got to go out and buy another golf club. So he's got to, you know, I think it's best to kind of grow into something that you can utilize and kind of look at. So with that said, let's take a look at the advanced decline over here, the one that looks the strongest, and something that we've been kind of talking about for a little while here. And as you can see from the real, from the peak high in the NYSE, and we take a look at this, and we're going to scroll all the way back over, and let's go to the peaks of these highs real quick, just to prove a point. So when we take a look at the highest closing value on a daily basis, and then we take a look at the highest closing value on the AD line. So what I'm sharing with you is that's the highest daily close value in relationship. That's where the AD line was on that day. Then we have a higher AD line reading, and price on that time and point was actually lower. So what that kind of suggests is maybe at this high, which was back in September, it was at this point, if you look at, well, why would that happen, John? And then when we made a new higher closing high, right, closing daily higher high, the AD line made a lower low. So that right there was divergence. Incidentally, folks, this was back in the time frame when we were using the S&P 500 and announcing we have a broadening top formation. So needless to say, why did the AD line make a newer high with price and perhaps fake people out thinking that this market was going to go up? And my explanation, and quite frankly, I don't like to teach this out to outsiders, so I know we have a couple of visitors here today. This is kind of something that's very interesting, why I do not teach, why I do not instruct or use for my own trading exclusively the advanced decline in the NYSE, because it contains interest rate sensitive stocks, such as preferred stocks, of course, and more importantly, it has bond funds, which their value is quoted in price, not yield. So if the stock market's perceived to go down, people flock into bonds and they'll buy a bond fund. So what happens to the value of a bond fund if it's valued in price? It's going to go up. And if the value goes up, it will be reflected in the advanced decline analysis, right? Because it's a part of, a component of that index. So hopefully that makes sense to you guys. Now, when I look at this and I say, well, gee, golly, folks, the AD line looks pretty darn strong here. I mean, if you note here, price is significantly off this high in the NYSE, but the advanced decline is actually making or at new highs. So if you look at that, I mean, it might be like, I think it's like by a tick or two. It's ridiculous. I mean, it really is. It's 27,749, and I think the reading is 27,422. So it's not quite there yet, but it just, I think on Thursday peaked its head. I could zoom that up. I think it did make it by a tick or something like that, and then of course Friday sold off a little bit. So what's my point I'm trying to make? The point I'm trying to make is it would be explainable if you're looking at breadth analysis that relates to the AD line and breadth analysis that relates to the NYSE composite index. You could get false strength or weakness readings. So why don't we look at the stocks and the sectors that we're actually trading? So with that said, we take a look at the Qs right now, the NASDAQ 100, and we look at the daily chart, and well, while we are not at old highs, we are closer to the high of the AD line reading than we are the low. And volume did pick up. We supported off monthly support, so we got that right so far. Right? We've been talking about that since the beginning of the year. That's a trading range environment. Don't get bearish. Don't be throwing a baby out with the bathwater quite yet. Now let's take a look at the weekly reading, which is a little bit different because you take a cumulative value of advanced decline from Friday to Friday, not intra-week. So we look at the daily to look at intra-week changes, and we look at week to week to look at the longer-term picture. And when I take a look at the longer-term picture, I'm thinking to myself, well, let's take a look. Where are prices? They're hanging closer, and that's what this green box represents, kind of like the trading range environment we've been talking about, right? And it really has been holding. That's what that line represents across our screen, that old peak high. And this is, again, a quarterly pivot, which is kind of a coincidental factor that the market has been holding against the quarterly pivot. So that's why we weren't bearish down in the hole in here. We didn't see a tremendous volume sell-off. It was a little scary. Seasonally, you get that January break, and now we kind of regroup and see if we can go up. Now, what about the 100 stocks? How many of the stocks, or is it a majority of the stocks in the based off the Qs, which is only 100 stocks? Are the majority of the stocks in the NASDAQ 100 going up in association with that index, or is it only a few stocks? And the funny thing is, if we take a look at this, you'll note that where are we in relationship to kind of like the range of this market, right? In this area, in this whole area, we're closer to what? The highs than we are the lows. So it tells me that not a majority of the stocks are selling off in that sector. So it's not like one or two stocks or 5 or 6 or 10 stocks that have high capitalized value, that have a heavier weight. If you have Apple, if you have Biogen, Amgen, a few stocks in the index that have a stronger weight. I mean, if you had 10 or 15 stocks that have a 2%, a 4% weight that add up to like 30% influence on the value of the index, if the majority of the stocks go down and those 10, 15 stocks go up, you're going to see possibly a stronger index price value, but the majority of stocks are not going to be what? Going up in concert with that index, and that's kind of scary. So with that said, let's take a look at the rest of the market and say, well, what is going on here? When I look at the S&Ps, I go, well, price is getting closer to its kind of trading range highs, and I think now it's starting to be a little bit clearer that we've been and still are in a trading range. I mean, that's pretty much what we're doing. So the question begs, are we going to break out and go and continue on, maybe if we're in a channeling resistance line, and if you take out these few days, we're kind of, you know, channeling. As you can see, it's a slow grind to nowhere almost, right? We're just back to where we were in November. I mean, seriously. So all that's happened is a lot of people have gotten long, gotten short, gotten chewed up to the dickens, and, you know, it's something that I think that's what this market's representing right now, is a lot of indecision and choppiness, and there's major changes that have occurred. Crude oil's down. I mean, I give that to you, and looking at what's really important this week, okay, is that we did generate the Qs generated a weekly high close doji bullish pattern, but not the futures. The futures did not, the Qs, the cash did. When we take a look at all the other indices, when I tell you that the S&Ps, the Qs, the NICE, and the diamonds, they're all still in a weekly sell mode. All right? The Qs are in a weekly sell mode. They just generated a bullish high close doji pattern. Note that while we were 2 weeks ago, stocks in the S&P 500 that were above their 10-day moving average were at 203. Then last week it went to what, like 250, and then the week after that went to 250, and then this this past week we finished, now we have 358 stocks over their respective 10-day moving averages. So stocks have started to go up in value. I've been measuring that. If you don't know or did not know how to validate that for yourself, you can simply go to the document tab and download the last 3 weeks of notes, which I have kept in there for you guys for that reason. All right. Interesting. OIH, as gold starts to end its seasonal strong period of time, the energy sector starts to, as we talked about, base out, bottom out in mid to late January and start to rise, entering their most seasonally strong period of time around the first week of February. And I will tell you this, OIH, which you know I've been more studying and focusing on in our weekly observations, the OIH generated a weekly high closed doji pattern, and the XOP closed positive on the week. And when I say closed positive on the week, I mean the XOP closed above the prior week's high. We did not generate an official buy signal. When we come into stocks to watch for this week, Riverbed, NVIDIA, ENTR, and what I've put on this sheet for you is when the earnings are. So Riverbed Technology, it's a semiconductor, has earnings out this week. Microchip has earnings this week. So if it says E129, it stands for earnings on 129. Okay, E stands for earnings. So I've already supplied you with the date. I've supplied you with what sector it's in. In the energy sector, I'm currently in an option position in COP. We've talked about that probably to death last week. I like Diamond Energy. We have earnings out on COP this week. And the consumer staples, I'm going to go through some of these names, but Tyson, the chicken guys, right, had a weekly high closed doji, but earnings are on 130. Now, here's a stock that I thought was interesting, and we're going to go over this one, is FSTR. It's a transportation. It also has, coincidentally, notice how I'm giving you a lot of these weekly high closed dojis, earnings at the end of February. In real estate, Zillow. I don't know how to say, is that a social media stock? Is it real estate? But it's classified as real estate, so I threw that out. Zillow formed a weekly high closed doji. Now, bearish setups. Does that mean we got a trigger? No. A setup means that, funny thing is that in the mining, we were looking at this in our option mentoring class, Newmont Mining. I said, listen, implied volatility is at 52-week highs. Gold starts to enter its seasonally weak period of time. They could catch up, let everyone jump in this market with high implied volatility. When we get a trigger to sell short, I don't think the market's going to go straight down. I think what we do is go from a trend to a consolidation. So if, like, for example, stock market goes in a trend and consolidation. Now, this is a pretty wild consolidation, but if we can identify that the bullish thrust of the first leg of the trend is starting to dissipate, then what would be for an initial trade setup on a high implied volatility, what would be the initial position one would take? Well, the first thing we would think of is credit call spreads. Take in some premium. We're not looking for the market to crash and burn yet because we don't have actual triggers on higher degree time frames and other indicators that would constitute a trend is in effect. But what we have is that the bull upside leg has ceased to continue. So with that said, once we get that set up, we can start to explore credit call spreads. Then as we get more directional trade ideas, we can get more directional on a trade as it breaks down from a small little consolidation. So I'm going to show you this real quick. I want to just go back and to share with you. When I look at the S&Ps, I think the market's still in a trading range. Greece elections came out there. The guy that got elected, I don't know, apparently he doesn't think that he's going to try to remove austerity, but I think that's probably the hedge that Mario Draghi was kind of doing with implementing that huge quantitative easing program that he announced Thursday, was on the anticipation that Greece would pull some knucklehead move if the new guy got voted in, and that might be the first reaction of the market in the overnight session, falling all the way to 25. Well, I can tell you, we're starting to see an increase in the advanced decline in the market, and the volume surged a little bit, so I can't get ultimately bearish in the market right now. maybe we need to, especially with the technology or the Q-laden sector. And what I also note is that in the Russell, let's look at the Russell. On a weekly basis, we're still in a buy. The Russell, look at the AD line. It's closer to the high than it is the damn low. That's a fact, right? The volume seems to hold up pretty well. Seasonally, we seem to see a little bit of strength that lasts going into the mid-February timeframe. So the Russell with these long shadows still, I can't rule out with everything I'm looking at, let's get bearish. What I think is important is in the Dow, high dividend yielding stocks, 30 stocks, I'm looking at, as the market's trying to rally, it's actually closer to its lows than it is its highs. And what I think is, truthfully, I think that's pretty good, and here's the reason why. If the market's truly bullish, then why would people want to go and hide in high dividend yield, large capitalized stock just to sit around and collect a dividend, but yet take a huge price risk? So that's kind of why I'm thinking more in the lines of why I'm not too excited about the Dow not looking as strong. So Friday, a couple things occurred. First off, Thursday we did, it was some pretty wild trading on the S&Ps. And next we had on Thursday, looking at the spider calls rather than taking the day trade. One of the things that I also wanted to kind of point out was we covered this in San Diego, is looking at the TradeStation histogram, right? When we got here on Friday, we did the with the Starbucks S&G options, and I'll go over that in just a minute. When we start to see prices, and many of you may have caught this, I'm not sure, but this is one of the things that I think everyone can kind of take a gander of. If you start to see prices move and as we opened Friday, so this is a 60-minute chart with daily pivots over it, and then you noted that as the volume started to dry up Friday. Now Friday I said, hey man, if we get a pop over that 55, the market could go, and it did pop over 55 for what? About a nanosecond, gave about a 3-handle rally, and then just failed. There was not a lot of follow-through, and I'll change this over now just as 15 minutes to highlight that. As you can see, there it is. There wasn't enough follow-through in that. So here's the breakout. The market goes up, and as the market breaks out, if we line this up, there was no volume behind it. And that I never like to see. If a market's going to break out and it's going to take old highs out and you get a buy signal, it's kind of a trilogy. It takes the last conditional change candle out, and it's a nice setup. We always look for, and here it is. Last conditional change, buy signal, it breaks out, right? Shadow, 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 shadow. Then all of a sudden breaks out. You got the buy signal going for you. Everything's working your way. But yet, where was the volume behind that move? There was no volume behind that move. It got no volume behind that move. The momentum, it started to lose. In fact, we had started to see newer highs in the marketplace. We saw newer highs than the prior day, and we started to see no momentum behind it. So lack of volume, no momentum, and it's Friday, and who in their right mind wants to hold long positions going into what could be a wild weekend? And of course, we did have a wild weekend. We opened 10 handles lower. The market sold off on the Greek elections news, more violence in Ukraine, and here we find ourselves trading at around daily support. So for me, for this day, there's a couple things that I wanted to review real quick. For day trading, I think let's let the market kind of figure out and retest this 36 to 27 handle today. I don't know where that's going to all play out, right? But I think that until we actually get a daily close, and this is what I'm looking at, until we actually get a daily close, and here's what I want everyone to kind of focus on is, remember this little breakout right there? Until we actually close below this candle's low on a daily basis, and it could get ugly. I mean, you might see one of these 50-handle drops. I don't know, but I can just tell you this. I have to keep my mind focused on what the current market environment is. And the current market environment, as far as longer term, the trend is still up. Intermediate term, it's sideways. Very short term, meaning 1, 2, 3, 4, 5 days in the last 5 trading session, what's the trend? The trend is up, okay? So that's what I kind of got to keep my eye out. Right now, I want, we'll post this in the room. We've got the daily advanced decline 129/365 in the S&Ps. That is the S&P 500 breadth analysis right now. So we're not seeing strong numbers. This advanced decline up here on an intraday or daily basis has been pushed around like no tomorrow. So when I say that, it's like when we start to see newer highs in the market, you don't see great accumulation of the market, and as measured by this advanced decline analysis, and that's why I share it in the room what the readings are, so you can get a gauge of where's the strength of the S&Ps, how many stocks are going up relative to how many stocks are going down, and at what price level. Because, quite frankly, it does give us an edge if we're trading the S&P 500, right, rather than looking at the tick or the NICE or looking at the trend, because it's more relative to the S&P 500 and has less influence with bond funds. So needless to say, when we start to see this market break out of a little wedge formation, which happened on Friday, and if we measured that wedge, it came right up to 355, which is why I posted in the room, if you bought these spider calls down here, dump them instead of taking that 5-minute high close doji that we talked about on Thursday. And then on Friday, I mean, we had our little Starbucks earnings play, which was pretty good. And as far as the rest of the market's concerned, I mean, the advanced decline, as the market makes newer highs, it was making lower highs. And so that advanced decline kind of helps us in the market look for an edge. Anyway, I think that today I want to look for the market stabilization in here, see what happens. We could be trading around. Don't forget Mario Draghi, he did do a little bit of quantitative easing, to put it mildly. And let me show you now. So I guess the long and the short of it is I'm not that bearish in the market still. Okay, I'm cautious because there's always a reason to be cautious. But looking at the Qs, support, if we can maintain in the Qs, if you're looking at the Qs this week on an intra-week basis down around 102.80, 103, something like that, I think that's indicative of not just the monthly support, but a weekly moving average. I'm going to focus in on the Qs, less on the S&Ps for my guide to whether the market's really strong, because remember, we're getting whacked and walloped with all of the, energy stocks. But boy, if those energy stocks come into play, this S&P, we're 1 week away from a high close doji looking at the S&Ps too. So let's take a gander real quick at some of the names in stock trading, and then we'll talk about day trades through the week, and we'll talk about earnings that are coming out this week, and we'll start scanning for some optionable trades that we can look at, directional, for maybe some potential breakouts. But I wanted to give you a heads up into the week of my overall feeling and describe to you what the sheets are reading, okay, what the sheet reads. And that, I think, is important. Why did I tell you that there's a high close doji on the Qs, and then I wanted to show it to you? So let's take a gander at some of the stocks now. And if you have your sheet, I'm going to start just pricing out some stuff. By the way, this is IGT. It does have earnings out on 1/28. It's kind of wedging in here. The volume looks good. The seasonality looks good. IGT is the company that makes those slot machines that, while revenue might be down in Macau for some of the big casino operators, they have to swap out machines all the time. And there's been a big push on most of the casinos on the Strip in Vegas that have replaced a lot of these old three-wheelers they're called, the three-wheel slot machines with these integrated type of slot machines that are like putting, I don't know, steroids on crack. That's just like, penny slot machine is like almost a $5 bet every time you jump on the Bet Max thing. So I've just seen this and just looked at it. But boy, if this was a 5-minute chart, and it's not, it's a monthly chart, and it's been in a sideways action, look at the volume. No one's selling this company on a longer-term perspective. Volume looks good. Now let's go to an intermediate weekly chart. No one's selling this market. It's looking as if it's compacting, and it could get a little surge to the upside. And even looking at a daily chart, daily doesn't look great, I got to admit. The daily chart does not look great. So from an earnings perspective this week, unless today, tomorrow, we get an upsurge in price and an upsurge in volume, this might just be a better longer-term holding going into the seasonality of the March-April time period. All right, so that's IGT because it was on our sheets, and it's something I wanted to go through with you. RVBD, Riverbed Technologies. It didn't go anywhere, and on our sheets last week and the week before, I said we would get a trilogy set up on Riverbed if it broke above that 2083. Well, we haven't closed above 2083, and the market's it had a spike, gap higher, it came back into value, but here's what I'm looking at. It's still, you can see the PPS triangle, you can see the green triangle. Guys, look at this volume. What's up with this? The volume here is off the frickin' charts. This has what? A trend, a kind of a sideways pullback. It's in a monthly buy. It had a whale of a scale all the way back down and came right back up. If you take a look at this one on a monthly basis, a hammer, a buy signal, it came back into the pocket of the moving average, and this thing, look at the volume. This thing looks like it's getting ready to just blow to the top. This is Riverbed Technology. Now, it's software services, and it just, to me, it has the ability of, in order to figure out how high could it go, ask ourselves, well, where the hell has it been? Well, I don't know if it's going to $40, but I would say that it could easily rip the highs up here to the old high of what? $24, right? And if this is a bull flag, and if you measure from A, B, and this is the flag, and you measure, it extends up to a little above that high would be the measurement, okay? So that's why Riverbed's on your sheets. Next, let's take a look at MCHP. MCHP, microchip semiconductors. The semis, and you'll note in your sheets, your weekly sheets, I did mention about the semiconductor sector, the SMH. I don't mean to get, real sector specific, but if we want to figure out which way the market's going, the overall stock market, we better start looking at what sectors are driving the market. And that's why you guys take the time to read this stuff, and you'll see, well, transportation was up 2.5%. The XLK was up 2.65. What drove the XLK? Remember, that's a diversified ETF. Semiconductors was up 2.5%. Biotech was up 1.4%, and it was the social media. SOCL, social media stocks gained 4%. So that would explain why NASDAQ 100 outperformed other stock indices, right? So that's the driver of the information I provide you, not my finger feels this and I think that and the dollar this and all that other joker stuff. I think that's joker stuff because it's the obvious information. Everyone can tell the dollar's gone up, so you hear everyone talk about, oh, the dollar this and that, and oh, Greece, and at the end of the day, what's driving the market? Technology. We're a technology demand-driven society and on a global scale. So anyway, if I take a look at SMH real quick with you guys, so you take a look at the semis, SMH, there you go. My Lord, this thing, yeah, we got a couple doji stars up here on a monthly basis. Seasonally, I would wait for this thing to kind of, when it peaks out in April, it might not go very far, but I'll tell you what, it has a chance to just grind some more because even on a daily basis, I don't have real strong volume. The weekly, though, does, and the monthly is weakening. So the semis, I would say that you better be very specific in this sector because it's not as strong as the numbers portray. So it might be like some people getting out of, like, let's take a look at one name that's very popular, which is Intel, which doesn't that daily chart look just like the SMH itself, right? So it's like, I'm not a big fan of Intel right here, number one. And then we have MSFT. Let's take a look at Microsoft, even though it's not a, a per se semi-stock. It obviously sells, application and software and of that nature, which if you look on your sheets, you'll note what comes out after the bell today in earnings. Microsoft. So for an earnings play, how would I play Microsoft? The volume on a weekly basis looks good. Longer term, it's already had a major run. The daily volume, the market's trended lower, and the volume is trended lower. So this is not one that I would play on an earnings basis one way or another. I don't have a lot of love or feeling for this one. It might just do like a lot of nothing, but if I'm playing an earnings trade, I want to do something like this, right? I want to kind of go with, hey, the volume is starting to move up in relationship before the move came. The weekly volume is starting to point up, and the monthly volume is pointing up well before the move in Starbucks occurred. And it had a powerful wedge triangle formation. Clearly, you can see the difference between the setup. If the price is sitting here, just to give you an example, we have a PPS buy signal, and the next day, what direction was volume going? And then the day we talked about it on Thursday, which was mid-session, the volume was breaking out to the upside, right? So that's why I say, hey guys, you could get with this measurement of the wedge formation, and this is what I look for to be specific in direction. I mean, real simple. If this is a wedge type formation, I mean, the measurement of the wedge base, and this is what we put on the trading room, and we created these charts. This measurement should equal between our area of 88 to what did I say? 88 to 90 area would be our area objective. That's the measurement objective. Now, I did tweet out because I don't know, once the market gaps up and it's here, and I'm in an 85 call that expires in like 7 more trading hours. Is it going to get to 88 by the close? Is it going to get to 88 by next week? I don't know, but I'm in a weekly option that I got not a lot of time left, and I got an option that cost 30 cents, and later in the day they were even 50 cents. I told you guys you can pick them up there. Guess what? At 190, it makes no sense not to take some money off the table. So that was the trade, the Starbucks, and I just wanted to go through the difference in the components and the way the whole technical and the conditions of the market looks. So when I tell you about MCHP and all these other stocks, I'm looking for an earnings optionable play, I'm looking for the best edge possible, and that's what we're describing. So let's take a quick and finish up with this, and I want to look at ESENTR, technology hardware. You want to talk, I mean, this is a $2.56 stock. I mean, this is pathetic. This is not the normal stock that you would want, but this is like an option in of itself. But when I look at the daily analysis, right, I mean, it doesn't have great seasonals until, I mean, it does base out, and, by February could be because of earnings, and then by the 1st of March, huge upside. But what I think, because it's already gotten its butt kicked, right, but look at how it's gotten its butt kicked. Since this point in time, that weekly volume down in here, somebody's accumulating this stock, and this is a weekly chart, kids, weekly chart. High close doji on a weekly basis with an accumulation of volume. Someone's buying this. Now look at the monthly chart. The monthly chart, this stock came right into old support years ago in 2010. So because there are earnings, and I don't know, maybe this is a buyout candidate. I don't know. You could do a little bit more research, but someone is accumulating this stock. That's what it looks like on the volume. And with the high close doji analysis, I can tell you this thing could, it's not going to be a retirement trade, I guarantee you that, but it is certainly something that had caught my interest that I wanted to provide that information to you. So let's look at COP, ConocoPhillips, COP. All right, we're taking, the market's coming back down a little bit, but what I liked about this was the incredible seasonal analysis of the market. I like that, number one, I loved this fact that the market was moving down and there was no volume. We had convergence, not on a daily basis, on a weekly basis, but even on a monthly basis. Look at this. On a monthly basis, this stock falls from grace from an 86 to a 60, and they could barely budge the dial on that volume on a longer-term scale. So for me, monthly, weekly, and then now daily, if you can definitely see, price is moving lower. If the price is moving lower, why aren't they shoving it lower on huge volume? There's something going on there, right? So that's what I was picking up with COP, and why I like COP was based on not just the seasonalities, but also the volume, and on several different time frames. All right. So in our sheets, we talked about OIH. Well, here's the OIH popping up. Here is our doji on IOH. Here was an official high close doji. If you believe in or use the stochastics indicator, you got to admit that's a little bit of convergence forming in stochastics. The only problem with OIH at this point in time, though, there is an issue. The volume isn't really starting to accelerate on that low. And if you note on the daily, it's a lot different than COP. In other words, price is making a low, and so is volume. So we need to watch this, but we do have a high close doji, which if we take out last week's high, then this thing's off. If this thing takes out last week's high, 34.47, which somewhere right around in here, you could take a look at this shelf of resistance over there, 34. You can go at 34.50. I don't, somewhere around in here, if you take out that shelf, and if this market pops and gives a daily close here, and that volume finally pops, boy, I'll tell you what, the OIH is the sector to be following, and it will have positive influence on the S&Ps. All right, next, just to go through these things, let's take a look at TSN, Tyson. Earnings is on the 30th. This is another one of those that I mean, from I guess a chart perspective, it kind of had the same makeup that Starbucks had. It had a longer term type of wedge formation. It has volume, popping off there. It's a chicken maker. They make a little bit of chicken. A little something, little chicken soup for the cold and flu season here. And by the way, I'm out in San Diego. And, I've got grandkids and all this stuff, and so people are telling me, oh, yeah, by the way, we've got a measles outbreak. I go, what do you mean a measles outbreak? I haven't heard that on the news. Oh, yeah, Disney World or Disneyland, whatever the one is called out there in Orange County, they're thinking of closing it down to sterilize the whole place. It's a big measles outbreak out in California. I'm like, oh, sweet. Let's finish this seminar up and get me on a plane quickly. Even though I've had the measles, I don't need to be a carrier. I don't know how that all works, but needless to say, thumbs up there on Disneyland, right? That's one big measles outbreak facility, it seems. Anyway, look at the accumulation of the volume. What do you think? I don't know. Tyson chicken? Perhaps we could see this wedge formation, and if it is, man, that's a measured move, if it does break out, of just about $50, okay? That's what that kind of, so I asked myself, can Tyson get to $50 if this thing broke out? I'd say, when a stock consolidates and volume goes up, somebody's buying this thing. I have to go back and say, it's tough to buy an all-time high, but boy, we've seen it. We've seen stocks go up. This is a quarterly basis. That volume sure does support this huge ballistic move. All right, so that's Tyson. And then let's take a look at FSTR, which is, again, a transportation sector railroad. Huh. So are they moving iron ore? What are they moving? I don't know, but the volume on the daily chart kind of popped. The volume on the weekly popped, and the longer-term trend OBV is pointing in the right direction. Again, high close doji on a weekly basis. Perhaps you can get a pullback. This is another one of these type of low risk, but look at the pattern. I mean, obviously you're getting more of these stocks that are showing contraction, and they're either going to, in a wedge world of trading, you're either going to get a breakout to the upside and it would be a continued move. And you got to admit, what I love about this as well is it's in a seasonally strong period of time. So these are names that, I wanted to go through with you and define for you first and foremost, why would I even put this stuff out there? This is Zillow. And Zillow is a stock we've done well. Here's a high close doji. It's already popping off the charts today. Seasonally, it does move. Their business model, we traded this earlier last year. We did, I think it was another earnings type of thing, and it just didn't, I didn't think it would have a big move to the downside, and it didn't. I think that was back then, and then it just shot up. I don't remember all the details, but it's something we followed in the past, and I think if you note that this is another stock that has one of these situations where prices have made newer lows with no volume behind it. So that is a convergent setup. So I think that at the very least, it's a stock that if it does want to get back into the upside of the range, we could see, maybe in the 120, 125 handle. It does have a weekly high close doji, and, closes over 110, which is the last conditional change from this week, which is where the market kind of spiked up and failed. You see? You close over there. I mean, why wouldn't we want to see the next target near 124, which again is a quarterly pivot, all right? Monthly pivot, probably people might be looking at that. It's 117. I think with this market's showing some accumulation rather than distribution down here, all right? That's Zillow. Next, finally, NEM, Newmont Mining. John, you talked about a daily double doji. It sounds like a game show. The daily double doji. Where's the, now we got a weekly, now we're going to have triple doji, triple star, tri-star, a doji tri-star. So let me show you something. Option expiration. Here's the option expiration pivot. Instead of a monthly calendar pivot, we're looking at an option expiration. Sometimes certain stocks migrate towards option expiration. So if I'm looking at the pivot analysis and saying, is the monthly more effective than the option expiration? And as you can clearly see, boy, this particular stock, more times than not, really does respect the option expiration numbers, doesn't it? We're starting to see a lot of evidence where certain stocks will perform better and cling to option expiration pinning, and so therefore the option expiration pivots might work better under some circumstances in certain stocks. So when I look at the pivot analysis, I like to kind of visually back test. Does this stock do pretty good with, or is it just a coincidence? And I go, man, I can go back with Newmont Mining, and I can say, I'll tell you what, guys and girls, this thing not only does the directions kind of point and paint the picture, but determining a bearish trend, right? Not only do the expiration pivots project lower highs and lower lows, but my God, this thing, every time it gets near on a bearish or a bullish outlook, and it's definitely working. These option expirations, it seems Newmont Mining does seem to be effective, and so therefore the visual back test, and I know I only went on a daily chart back to 2012, but I could tell you this, it's a pretty much of a coincidental factor that in back months, it works against support, it works against resistance, and now we got resistance near 25 bucks on Newmont Mining. Implied volatility is at the highest it's been in 52 weeks, and I got a 3 doji star. So what I think might happen is this tri-star, we might get a pop earlier in the week and then get a secondary higher high. We're going to watch for low close doji. Either way, a lot of indecision, everyone thinking Newmont Mining's the stock to buy and go straight to the upside. I think at the very least, we get one more push up near here sometime this week, credit call spread candidate, and that's why I put it on your sheets, okay? I just wanted to give that to you straight, and that's why it's a bearish setup. It's not a bullish setup. It's a bearish setup because it's forming dojis at a specific option expiration. That's what I kind of wanted to make mention for you guys, okay? So, in conclusion of today's session, one last one is RGO, Perrigo. This is the biotech. I'm not a big fan of biotech as in the next couple weeks. It ends a very strong seasonal tendency. Volume is selling off. We have a weekly sell signal. We got follow through. I want to watch not just Perrigo because it had a weekly sell signal. I want to watch this thing because, boy, we could really see this particular name, if it wanted to correct, drop about 30 bucks. So I'll keep that in mind. That concludes today's session of reviewing the weekly sheets. And again, for reports today, we got the Dallas Manufacturer Survey. I believe that is correct time at 10:30. I'm not sure why. 10 o'clock is normally when they come out. FOMC this week and a bunch of earnings which we'll go through together this week. I hope that it concludes this weekly planning and scanning. And I know I went way over time, but it was something I felt that there's a lot on the table that we need to discuss. So thank you all very much.